Hey, it's Mack with PriceActionTradingSystem.com, and it's Wednesday. It's April 23rd. This will be our chart lesson for today, and really it's just a trading range today. We started out with this down channel, fairly obvious down channel. Then we had the break right here, two legs down to a new low, and then we spent the rest of the day in this channel. And this stuff's getting really choppy and thick in here, and there's a downward. And one thing you got to understand, there's a downward bias in this move today. So you're better off taking shorts than you are longs. Notice I got a couple of longs here, but we had a new channel work, a new trend going up, at least at that point before we went into the range. And so notice after that, it was mostly only shorts. And there is a long right here, and I'll explain that one. But for the most part, it's all shorts. Notice that there weren't many buys off the lows. This one was a possibility here. But there wasn't a break of this channel coming down yet, and there was no new lows. So, there's a lot of overlap there too. So, when the bias is down, which it is, and notice how we're kind of making lower highs right across here. That's a good sign that you're going to work lower. So, but let's talk about the trades. Let me make it just a little bit bigger. And early on, what you had was channel right here, and you can see that off the first two swings. You draw that, you drag it down, look how it's fitting. It's holding prices on the low side, and then you're heading up. So now you're just looking for a chance to get short. You got a little double top there. Notice all those matching highs. You draw that line, and suddenly you get a breakthrough in a big bearish bar. I started to draw this one in green, but I went ahead and drew it in red. But really the reason I say maybe you should have drawn it in green was because you had some overlap here. You do have that little break higher, but you couldn't get lower there. So when it broke lower, you were better off to drop a limit order in here. Even if you use a stop, but that's a real bearish bar. Even if you use a stop, it would have worked. You had enough room to scalp out. But when you get that overlap, you're better off to use a limit order. And you can see it would have gotten filled all the way back up halfway into that bar. And then you get out a lot easier, and before you get to those closes there, and definitely before you get to that low, you can scalp out before you really get to that low regardless. But anytime you get in a little bit early, it's going to be helpful in the end. And then you get a little correction here, and you pull back, and you actually get a break of the trend line here. But notice what you got. You've got one leg up, a correction, and then a second leg up, which is one tick shy of a perfect measured move. And so that's on a bigger picture, and I don't want to confuse people, but that's a two-legged correction. And if you went to a little bigger chart, you would see one entry, a pullback, and a second entry right there. And that's all second entries are. Count. You're looking for two legs and a second chance to get in after, because the market moves in twos. You can see it right here. You got a little two-legged correction, and then it goes down. And that's in the middle of a bigger leg here, and then a leg down. That's all it is. That's all second entries are. You're looking for two legs. And so on a bigger picture, you got a second entry short. That's the first break of the trend line. But there's other reasons to enter here. Look at all those matching highs. It's a failed break. This is a little trading range at that point down here. It's a failed break out of that trading range. Odds are prices are coming back inside, and sure enough, and they go to the other side. They find a little resistance there, but they shoot on through. That's because the channel is taking precedence. And all this is a correction in a downtrend. It's a two-legged correction. But now you've got a signal that, hey, we've got a break of the trend line with a new low. We may get um, we may get a reversal here pretty soon, but then it bounces right off the trend line again, a big bearish bar. Again, this is one you might have thought about using a stop right there. Let me move this out of the way. But you're better off to let it break and then drop a limit order in there and see if you can get filled. And I think you could have on that one. But you might have even used a stop. And then for one thing you're looking for too is you're looking for a measured leg, and there's leg one, and then here's your two-legged correction right in here, and then so leg two, you're looking for a measured move, and look where it goes to. So you're looking for something down here a little further. Plus, we're not to the other side of the channel yet. You don't always get to the other side of the channel after a trend line break, but in this case we did. And you got maybe one or two ticks more than a measured move, and then it reverses. And so that would have been another clue that, hey, it's probably okay to take this next move off the trend line. But past that, now you've got a break of your trend channel, two legs down, so you're not looking for shorts anymore. You may not want to take a long either, but you're not looking for shorts until you get something, you're not looking for longs necessarily until you get something confirmed in the other direction. And then you're heading up, and so you draw that trend line, and you get a failed second entry short right here. Notice that. You got a new low, pull back first entry, pull back second entry, and look at it reverse. It trapped everybody, go long right there. And then you get another pullback. It's the first break of the trend line, but notice this little bitty doji. Prices break lower and they turn up and go higher. Just go long right there. And you're looking for prices to try to make a new high at least. And you got enough room there to get out with that small doji. And we come up here and guess where you find resistance? Right back up here at this same place again. And you probably would have moved that up a little bit. I usually try to follow the closes, and you would have moved that up, and look, you don't get a close above that, you break, you test it twice. But somebody asked me why this failed right here. We go over this every day. Once you get your trend line break and two legs down to a new low, that's where they trap people. And notice how we didn't get a lot of resistance. We got a little resistance off the EMA right there and the trend line, but not much. It got on through. That's a good clue that something's not right, because generally when it pulls back to the EMA or the trend line, it's going to shoot down like this did right here. And notice how we pulled back to the EMA there, and it bounces off. And notice we didn't get much resistance here. We got a little bit. We closed right on it. It tried to go higher and then turns right back down again. So those are helpful. And you can see, prices now, later you can see them swinging back and forth across each side of the MA. You're better off you got to really be able to read this stuff right. Somebody sent me an email asking me to go over that, and I'll try to explain as best I can, but it'll be the same explanation I give every single time, is that draw your short-term trend line and follow the rules. And that's the only way that I know of to stay on the right side. Notice this, you're working up, and finally you get a break. And so really, once you got this confirmed trend, every time you came back to the trend line, you probably could go long again until you get the break. And then I wouldn't go long anymore after that. Right up here, you're taking a big chance going long right there, because you're back up to these highs. And what's probably going to happen, you're going to turn, you've already had your break and two legs up to a new high. And if you'd had plenty of room before getting to these highs, I'd probably say, hey, you may want to take this second entry right here. But you don't want to be going long at the highs right there in a trading range right at those highs. And especially after a break of your short-term trend line or trend channel there. And then guess what? You get a little channel working down. You get a break. And you tried to go to the make new lows. You eventually did, but you really couldn't. You tried to go lower twice, and you really couldn't. And then you got one going up. You get the break here, a move to a new high. And then you got one working down, a break, a move to a new low, and then this one just has been working down. We've got a break of it now, but we've never really tested the lows again. There's enough time in the day for us to make one, but we could just go to the other side of the range, What you got to do is draw your trend line up through here and stick with it and follow the rules. And that's the only way. And when it gets real choppy like this, like I said, sometimes it's better off just to stay out. But here we go. We've come up here. We've tested these highs again. We tried to go higher once. We pull back. We try to go higher again. That's a failed second entry long right there. And it turns down. Just go short right there and look at it go. Boom. It trapped everybody. And it's headed to the other side. And then, of course, you got your move coming out of there. And you got a break, a move to a new. I circled this in green. You might have thought about going long. That's really a two-legged pullback right there. Notice that high. you pull back, you try to go higher again, and then you turn down again. And if you go to a smaller chart, you'll see two clear legs there. So it's a second entry long. I drew it in green because there's not a lot of room before this high. There's plenty back to here, but this is the one you're most concerned with. I think the only way you can enter this is to enter with a limit order. I don't remember if it would have gotten filled. I don't think it would have gotten filled. And so you don't really have enough room there, and then it turns back down again. And so now that you got your break and a new high, especially when you got a second entry there that the entry would have been 81.75, and you see it was 82.75, so it's a failure as far as the actual rules go, and it turns back down. There's a doji right there, and again, you might have used a limit order here, but you're looking for prices to try to go to the other side now. And notice they're working down in that channel, and you get the break and the move to a new low, and now you're kind of working out of there. But you actually had another channel working down right here, and so when you try to go higher and turn back down, again, that's a failed second. You got a new low there, and you pull back, you try to go higher. And look at all those matching highs. This line was down here now, and so you're coming right off that high after you got a new high. You tested it once, you tested it twice, it fails. It's a failed second entry long again, and just go short there, and you're looking for prices to go to the other side again. And it just chops lower. And again, you might have thought about going short here because it's right off the trend line. But notice this little median line. You kind of got there's two sides to this range, and there's a little median line right in there. And from where the original range was across there, it's almost right dead center. So it's the center of this bigger range. And you've actually shot below it, pulled back once, pulled back twice, and then you turn down. It's getting a little close to these lows, so that's why I drew this one in green. Again, you got to use it, wait for it to break lower, and then drop a limit order in there, and you see it came back and filled it and then turned straight out. And that way you're guaranteed to get out without getting caught without enough room, because at that point this line was right here, because that was your last closes down here, and there's not a lot of room between there and there. And so always keep that in mind, that you want to follow the rules and make sure that you got enough room. If you're going long near highs, you got to make sure you got room to scalp out. And if you're going short near lows, you got to make sure you got enough room here to scalp out before getting back to the lows. It's key critical. And I see people, make that mistake. Now, if it's a runaway trend, you got to enter wherever. But when it's just a choppy day like this, then you got to be real careful about it. And when you see this EMA is flat like this, there's only two ways you can really enter this, and be safe, and that's buying the lows and selling the highs, and following your little short-term trend lines. There's just no other way to trade it. I mean, there's nothing predictable other than the fact that when you reach the highs, it's probably going to turn down, and when you reach the lows, it's going to turn up. In the middle kind of is where no man's land happens. And again, the bias was downward today, so you're mostly interested in shorts. And so that's why this long is in green, for that reason and some other reasons we'd already discussed, the room of getting out. And that's why this one's green, because you're so close to the lows. But it's still a short, and it would have worked if you follow the rules and enter properly. So, and that's really all you can do with a day like this. So it was real clear early on, and then it kind of got muddied in here, and there's nothing but a trading range. And it looked, they tried to take it lower here. They couldn't do it, and finally it gives up, and now we're headed the other direction. So I hope that's clear. There's a couple other things I wanted to share with people. Let's see here. I'm gonna pause this a second. Okay, this is a chart somebody sent me, and notice they got this channel right. Look at this. They drew it. I mean, they're reading the price action really well here. They got their break. They're two legs down to a new low, and now you're heading in the other direction. And they're wondering why. No, it was somebody else that actually asked here why they went short. There did not take this entry. It was a second entry long, but it was a failed second entry short. Yeah, exactly. You recognized it, but obviously maybe it was a little bit too late. But this is the one they're asking about. This was the one on this chart. They had a failed second entry long here, but the move is over. They just came off the top of the range. Their trend channel here, let me show you my trend channel in comparison to theirs. Notice, hang on, let me show you. Notice these first few bars and swings are the most important piece of the trading range, and they did draw it off the bottom two swings. But notice there's not touching anything here, so that's telling you something's wrong. You should have been, prices were reacting off of something up through here. So um, this that tells you your channel's not exactly right. And look at all this price action in the middle. It's going up and down. It's not touching anything and going up and down. So even though this looks close, it's not exactly right. Look at mine in comparison. Notice how prices are reacting off both sides of those lines until you get a break and move to a new high, and then there it goes the other direction. So that's what you got to think about. And on this one right here, this is probably the line right here, because look how that's holding prices, and you got the overshoot, and then we kind of went the other direction. And that may be why we didn't get another retest of the low, because sometimes on a range day, you can't come back and retest. So we overshot that there. So that's just another thing to look at. But once it goes past those, then you draw it off the next swing, and guess that's where it bounces. So maybe what you've got here is maybe you got a little midline on that one, and that does look fairly valid there. So, but these first few swings here are the most critical. And again, if you look at their chart, their price bars are just bouncing out here in no man's land off of nothing. And but look at mine. That's the same area as what they've got marked. And notice how it's holding prices until right here, and then you move to the new high and you turn down. And I show that every day over and over and over. So it's valid. And there was one other thing I wanted to share with you. Somebody asked me, let me find that. I'll be right back. I'm going to pause it. Okay, I remember what it was now. I actually got 2 emails today from people that said they missed some good trades because they were waiting on news items. And there were no high volatility news today. And I've talked about this a few times, but maybe I need to go over it again. You need to be careful. The price, even when the news comes out, the price action is not wrong. But what happens is sometimes the news gets so volatile that it moves so fast and it overshoots things and stuff like that. So it can be dangerous. But that usually only happens in high volatile news. And there was no high volatility news today. I think there were mostly some low news items, and I think there were maybe 1 or 2 medium type items that don't really affect the price action. So if the news, if you know there's high volatility, and those are usually going to be, the FOMC ones come to mind immediately. Those are ones you got to be concerned about. Trying to remember what the others are, but just, check the news each morning. If there's going to be some high volatility news at a certain time, say 10 o'clock, then by 9:45 just be flat and don't worry about it. But if it's not high volatility, I wouldn't worry too much about it, and I would just keep trading, because somebody missed this trade, and then I actually got another message from somebody. So it came from 2 different people today that said they missed trades because they were flat because of news items, and they saw these great trades set up and they didn't go with them. So there's always the possibility that you could get a medium volatility type news that could be something unexpected, and it could cause the market to go haywire. If it does, just exit real quick. If you're keeping your stop like you're supposed to, the most you're going to lose is 2 points no matter what. So the only time I would really worry too much about the news, again, is when it's going to be high volatility. So if it's not high volatility news coming out, just keep trading and don't worry too much about it. So let me show you what you can do. There's any number of free indicators that you can download that work with NinjaTrader, um, that are news related. I may download one or two and put them in the premium section for y'all that, the members that want to download them. I think I'll do that. But even if you don't do that, you can just go to dailyfx.com, and what I do is I go to the um, economic calendar, which is this tab right here, and I think that's what pulls this page up. Yeah, and you can see that. And I didn't want advertisements to come up there, but they did. And what I do is I filter it out for, all you want is U.S. news. You're not interested in all this other stuff. And apply the filter. And then I save that so I don't have to go through that step every day. And then what I do is just go to this page, just save this page after you do the filter, and then go click on today, and that will pull up the today stuff. And you can see right here, it gives you all the news items. It tells you whether they're low, medium, or high, and it'll actually give you the forecast, and then once it comes out, it gives you the actual, and it'll tell you the previous as well. And you can see most of the stuff, the two big ones were manufacturing and new home sales, and that comes out at, actually, is that right? My time's not right. I'm on Central Time, so make sure you change your time because that's going to be real important. And then click today. Those things came out this morning around 9 o'clock, I believe. Yeah, 8:45 and 9. Those were the two biggies, and they were negative, and we kind of had a negative slant to the day, and they didn't really affect the market too much, 8:45.90. So that's, if you don't do anything else, you can just do that every day. And if there's a high, let's put the week on, and we'll see what day. It seemed like there was a high volatility. See, there's not even one this week. Let's go to the previous week. And you can see advanced retail sales comes out 7:30 on Central Time. That's a big one. Consumer price index, that's a big one. You can see the two high volatilities. But the really big one that knocks the market for haywire is FOMC. On FOMC days, there's usually not hardly any volume or movement, and everybody just sits tight and waits for that to come out, and then they try to trade. I try to get my trading done before 1 o'clock, and I don't even bother with it because there's no way to know what's going to happen, and it can get crazy. And people will ask me, well, don't you want to participate in those big moves? No, because I'd rather be in here when it's predictable, because if you're trying to trade it, you're just really gambling. So, but that's the only news you're worried about, are these high volatility ones. Otherwise, I don't worry about them too much. So, and again, that's dailyfx.com. Just go to the economic calendar. Again, make sure you set your time to your proper time, and just filter out everything except the U.S. stuff. That's all we're worried about. It's going to affect the market for the most part. So it doesn't mean something couldn't happen on the other side of the world that could affect the market, but they're so few and far between. It's not worth worrying about. So just worry about the U.S. data, and that's what we're trading, is the U.S. market. So obviously, if you're trading the Great Britain pound, then you might want to put Great Britain in there and filter out the U.S. So it depends on what you're trading too, but most of what I'm talking about is going to apply to the U.S. And you can see now we go to today and just look at today's stuff, and you can see there was some at 3:30 my time this morning. There was a high, something from the Bank of England. So if you're trading over in Great Britain and you're trading the Great Britain pound, then you'd want to be aware of that. So make sure that you understand that we're only interested in the U.S. if we're trading the ES during the ES hours, during regular U.S. hours. So, but if you're trading something else, or if you're trading the Japanese yen, then you might want to filter out everything but the Japanese yen. But you can download, again, you can download ones that work, news items that work with, and you can see there's the U.S. Let's just go to today, Japanese yen, see what they had today. And just all those stuff, nothing to amount to anything. So I don't worry about the low or the medium. I just worry about the high volatility stuff, because those are the ones that will, there can be some issues with. So, but I will find a couple of those that work with NT, and I'll put them on the website, and people that are members of the premium section can go download them. So but that's pretty much it for today. And again, for the email that came in, somebody came in with an email a little bit late there, and they were asking me something. Why on a range day the trend in a range has both failed second entries and longs and shorts? Because really the support and resistance is at the high and the low, and when you get in the middle, it's just kind of indecision. But you can see here there's a median line here, and it acts when prices are above it. It tries to act as support, and when it gets under it, it acts as resistance. So, but the only really, the only really sure things almost on range days are the lows and the highs of the range. And it looks like, just looking at it here, there's probably like a trend line right across here, and maybe it even starts right here and is working down through here like so. And you can see that there's something there holding prices. Let's just see if it fits on the other side. Yeah, maybe with some overshoots. I mean, there's obviously something working there. You can see it's affecting prices to a degree. I don't think it's the critical piece. I think the critical piece are going to be the highs and the lows here. But anyway, I hope that makes sense. Let's see what else. How to avoid chop and slow grind up or down. The only way to avoid it is just stay out of it. Don't trade it. When you start to see these dojis and these overlapping bars, if you're not sure what prices are doing and which way they're headed, you're just gambling if you enter. So do not enter. You've got to understand how to read the chart and understand what's going on. And even then, you can get fooled. So, the best thing to do is stay out of it. If you can, just get on the sim and practice it, and then study your chart afterwards. Otherwise, stay out of it. That's my motto, and it's a very good one. Anytime you do not understand what prices are doing and you try to take a trade, you're gambling. We do not want to be gamblers. If you gamble in this game, you will lose. So you got to keep the odds on your side, and the only way to keep the odds on your side is to make sure you're reading the price action right and you know what's going on with the chart. Otherwise, just stay out. That's the only way. And how do you decide when to take a trade at support and resistance when the second entries have failed long and short? I don't quite understand what they mean when the second entries have failed long and short. Pretty much, you wait on a setup at the low. Here, there's a long right there off this low. You might have even taken that. Look at that. Look at those bars. That's showing rejection there. Look how you're coming out of there. You want to wait till you see that before. There's nothing here to take. Look how it's all stacked up. There's nothing that's closing that's real bullish. And then suddenly you make a new low, and look how bullish that looks. And then you get a little. You don't want to be going short there, so you sit tight, and then all of a sudden you got another bullish bar on a second entry, and then you get the failed second entry short and another bullish bar. That's the sure thing then. Same thing coming off these highs. Look, you don't want to go short here. It's the first entry. By the time you get the second, it's not a very good setup. Just sit tight. And then you get the failed second entry long. That's the sure thing. Go short right there and look at it go. Here, the bias is down, so you got to be careful about buying really without a good setup. And, but even this is rejection here, and aggressive trader might have gone long there, and you see it would have worked. but you can't go long above this, and you can't go long above all that. Same thing here. You come down and you got some indecision. You don't want to be going long there. Now that's a big bullish reversal bar there, and so, but it's so far from the lows, it's real dangerous. And you see if you would have gone long, but hopefully you saw that channel working down, and you know you can't go long right there. And that's the other thing, is you're putting all the rules together. But where was that bar? Yeah, right there. Or right there, but they didn't close on their high either. So, and so they're well, now that I moved that doesn't look as bullish as I thought it was a minute ago. So, um, this is kind of rejection, but again, it didn't close on its high, and look, it pulls back, and there's really nothing going on right there. I don't see anything that would make me want to enter. So that's the difference. You want to see a good signal bar. You want to see rejection of prices, or you want to see a trap of some kind. That's what makes you decide if you want to take them or not. You don't just buy it because prices are down here. You want to see the setup, just like we do off. All this is a trend line, a slanted one. And when they're flat like this, you can take them off both sides for the most part. But generally, you're better off to stay with the bias. So we traded in the bias. We traded down into this range, so the bias is down. If we'd have traded up into this range, the bias would be up. And generally, you can see, notice how you notice the red a lot stronger in here than you do the green. There's just not a lot of green in there. There is some bounces that are green, but for the most part, if you just glance at this chart, it looks red. At least it does to me. So that kind of tells you your bias. And but you just follow the rules. This is just a channel that's horizontal instead of on a downtrend or an uptrend. And even within this channel, there's going to be your short-term trend lines, and if you draw them and you're getting them right, it's generally going to help keep you on the right side of the market. So, but anyway, I'm going to wrap it up today. We'll be back to do it tomorrow, and I will go in and I'll go find a couple of those news indicators that you can use with NT, and I'll put them on the website, and they'll be there for anybody who wants them. It may take me a couple hours to get them in there, but I'll get it. So, but anyway, I'm going to wrap it up. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.